Welcome back. This is Si Wing Yi from the Yi Real Estate Network and one of our member of our network. She's once again, Julie is back to co-host. How are you, Julie?
Good. See, Wayne, how are you doing this morning?
Bye. Very, very good. So once again,
Good.
in case you don't know the format, people out there, especially those of you watching for the first time, I invite Julie here because she's a very good co-host and she's an investor just like you guys out there. I mean,
Mhm.
just going through whatever I have to show and she's give her perspective from the shoes of a regular investors out there trying to do their best, right? Right, Julie?
Absolutely. Absolutely. Yes.
All right. So with that in mind, the topic for today, and of course, Julie, you have no clue what I'm presenting, which is good. I want your answers to be your thoughts to be spontaneous.
Right.
All right. So next 20 minutes or so, let's go through this PowerPoint. So the cost of waiting to buy rentals is astronomical. Okay.
hmm
What I mean by that, cost of waiting. First and
Yeah.
foremost, rental property remains the most historically proven asset class in the world.
hmm
And of course, you and I went over this numerous times over the
hmm
past few years. Most people can only see the rental income and appreciation above, if they can see it,
Right.
above the surface, above the iceberg.
hmm
But the key to investing, the wealth building through rental property is something you cannot see, something is under the iceberg, which is like 75% of your profit, or tax write-off, depreciation, using
hmm
leverage to finance your property, using the principal pay down by the tenant. So that's the multi dimensions of real estate investing.
hmm hmm
Furthermore, rental property is there are four ways to make money. Cash flow is just a one small piece of the pie. Okay,
hmm
cash flow itself will not make you rich. Okay, what make you rich
Right.
is invest long term by applying all the tax benefit, and of
hmm
course, appreciation 3 to 5% on an annual basis, on a historical basis. So it's at least a 10-year journey for to
hmm
achieve some resemblance of financial freedom. So it's not a
Right.
get rich quick scheme whatsoever.
hmm
And furthermore, as one continue to consistently buy rentals, depending on one's financial situation, you could buy one rental per year or two or three rentals
hmm
per year, whatever your goals are. But the key is once you create the foundation of your rental property, uh, then you could potentially, if you want to, that is, you can convert your existing rental property into like a short-term rental Airbnb,
hmm
or you can add a ADU, additional dwelling unit. That's why it's an amazing part of Julie of a any physical asset rental property
hmm
up to 4 units. At least that's the things I want. You could pivot other asset classes. There's no flexibility, but
Right.
rental property you can buy as a long-term rental first, then down the road, if you want to, you can pivot into mid-term rental, short-term rental, and co-living, plat split,
hmm
whatever. So with that in
hmm
mind, Julie, I know you bought, six rental properties. You have
hmm
six doors in the Midwest. But so do you agree that if you want to, Julie, maybe you don't want to, but your goals are different than some
hmm
people.
Right. Right.
Knowing that your real estate portfolio that you purchased already a few years ago, you have the ability to do
hmm
to pivot into other type of
Right.
what do
Yeah, it does create an opportunity for that flexibility. We bought ours with the idea of doing it long term, buy and hold, long term. But with those additional opportunities, like through midterm or short term rentals, or even the co living that you spoke of, it does buying the long term, it does lend itself to be able to do that. And
you.
I think I personally would see long term as like my foundation,
Yep.
and then maybe take one or two, and try midterm, because there are additional expenses and whatnot that go with the midterm that you don't have with the long term.
Right.
But then you can command a higher rental. So it really just depends on what your goal is as an investor and what you attempt to achieve.
Yep, I agree, Julia. I agree, and Yeah, because the new rules of the game in the future is that because of technology, we have there are because of technology, we have like systems and process or procedures. One could potentially become very very successful by venturing into different types of rental situations. So
Mhm.
we're not going to talk about any details because you and I talked about this kind of other type of investing already.
Right,
But
right.
so, but it all depends on where you buy, right? What location to buy
Hmm.
that can allow you to potentially pivot from a long-term rental scenario into an
Hmm.
Airbnb, mid-term rental, or co-living or whatever, right? But
Correct.
but just I just want to give a shout out on the other
Hmm.
markets that we have in like in North Texas and Central
Right.
Texas, South Texas, and Florida and Alabama. A lot of this market that we are promoting have the ability that somewhere down the road for you to convert into different type of investment
Hmm.
models, right?
Hmm. Right, correct, correct.
It's so exciting. Again, the topic of this presentation
Hmm.
is the cost of waiting. You know,
Right.
if you do not buy your first rental or more in a good market,
Hmm.
then you're losing out. And I'll tell you the
Hmm.
numerical profit you can lose by sitting on the sideline. We'll,
Mm.
we'll get to that, Julie.
Right, right, right.
Yeah.
Hmm.
So let me continue. So again, in certain market, you can do rent by the room, which is co-living, which is
Hmm.
up and coming asset classes. Again,
Mm.
yeah, PassPlay is a website. You can feel free to do your own research. People out there, PassPlay is a online platform.
Okay.
They'll help you create the model. You can convert your three-bedroom rental property or
Hmm.
four-bedroom property into like a 6 or 7 bedroom, right?
Mm.
You can convert your garage or you can convert an extra living room into a
Right,
bedroom, right? And you
right.
can rent each room individually. Now, some people and in many markets are some investors are slowly uh,
Hmm.
doing very, very well. So it's a new asset class,
Hmm.
just like Metro Rental. Metro Rental, was started like several years ago, and
Hmm.
slowly growing. But these are niche market, okay? You know,
Yeah.
so long-term rental, Julie, I started this long-term rental turnkey model like 30 years ago, right?
Hmm. Hmm.
This is the most easiest. This is the most passive of all investment
Right.
model, right?
Correct.
You and
Correct.
I, we have a lot of properties, and yet we spend 1 hour per month
Hmm. Right.
in
Exactly.
managing our properties because turnkey, you delegate and you outsource to professional property managers. They do everything for you.
Right.
So, to me, the foundation is a long-term rental. Uh, you
Hmm.
you must buy with cash flow, 20 to 25% down payment. You must get your cash flow. If it doesn't cash flow, forget it, right?
Right. Right.
But you must buy in a good market, growing market,
Yes.
good fundamentals, the whole 9 yards. And
Hmm.
in the future, if that market uh, 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 um, uh, are very, very flexible, you can potentially convert into more active management, into
Absolutely.
short-term rental, mid-term rental, and co-living, because
Hmm.
I, because it's a different mindset shift.
Absolutely. It is definitely a different mindset. It's a little more active involvement on the investors for a lot more active, depending on
Yeah,
which one you're looking for. Yeah. And I mean, like I said, everybody has to have their buy box and what they're looking for. I really appreciate the turnkey model that you've, taught us how to use, because we have so much freedom and we don't have to worry about it. I mean, like you said, less than an hour a month to manage the properties, and then we're good. We're good.
exactly. In a number of over the years, Julie, I know you know that, but the audience watching my video may
Right.
not know that. But
Hmm.
using the turnkey model, buying new construction, cash flow, good return, in a good markets in Florida, Texas, and Alabama, just to name a few
Right.
market that we work with, you could own 10 or 20 or 30 rentals, right?
Right.
single family
Right.
home to 4 units,
Hmm.
and using professional property managers that we use, uh, 1 to 2 hours per month, managing
Right.
10, 20, 30, 40, 50 rentals spread across
Hmm.
and geographically. That's it. That's
Hmm.
almost passive. I mean,
Right.
how, it's just too good to be true, but it is true, has been
It
proven
is true. It's
past
definitely true.
30 years.
Hmm.
Anyway, but still a lot of people, they use, fake gurus, and they,
Right.
they buy all the wrong strategies, wrong investment models, wrong
Hmm.
gurus, and they get burnt. Anyway, that's not us.
Hmm.
So this is the metric again. I have produced hundreds and hundreds of videos. People can join my website, become our
Hmm.
newsletter insiders. You will learn more about these other things we talk
Right.
about. So anyway, the numeric metric we use almost 1% rule, which is amazing. Eight and a
Hmm.
half percent cap rate, cash and cash return double digit, total
Right.
ROI 30 to 40%.
Yes.
At the end of the first year, I know some of you are thinking, "Oh, Mr. Yi, please provide detail." No, not today's. There's another video, or check out my video archives. We'll talk about it, but I'll go
Right.
to the high level. You know what I'm talking about. It's just a so
Yes.
anyway. Actual case study. Actual case study. The first year, at the end of the first year,
Okay.
I just pick on one of our great market in North Texas, Princeton, Texas, happens to be the
Nice.
fastest growing city in the country,
Mm.
and yet this is too good to be true, but it is
Wow.
true, because you can buy new construction in this amazing growing area of North Texas, Princeton, for example. New construction, look at the metrics, 200 grand, rent for
Wow.
1850, and you have them at 25% down payment. Look at this
Hmm.
monthly net cash flow,
That's awesome.
almost a whopping $700. Julie,
Hmm.
I challenge anyone out there in the country,
Hmm.
prove to me that these numbers are you match them in anywhere.
Right. Right.
Midwest market, Northeast market, South
Hmm.
market, Southeast market. Forget about the Western region. The Western region,
Right. Oh, yeah.
you can't cash flow because the median price is so high, the rent is so low.
Exactly.
I don't care what kind of property you can present to me, multi-units, apartments, or duplex in the Midwest, presumably, high cash flow property. You can't match. You can't.
Right.
You can match what I just share with everybody.
Right.
Part of the reason why, of course, we got the amazing buyer's incentive, a historic buyer's incentive, where the builder,
Hmm.
the seller is paying down your rate for you, when,
That's excellent.
which is in this case study, 4.375
Wow.
be fixed plus
Wow.
payment, and these numbers are staggering, staggering,
Hmm.
right? Because look at this monthly net cash flow. Look at this. Everything, all
Hmm.
these numbers are real. I know this is just a projection, but Texas,
Right.
is very, very good here in Princeton. The repairs, the HOA, first year property management is free. In addition,
Hmm.
the seller can pay you 1% closing cost credit, and of course,
Hmm.
with the rate buy down equals all this number. Look at the cash on cash return is 13% the first year,
Hmm.
and annual cash flow is 8,200. And they use my team on the ground. The seller use 5% projection, just a
Hmm.
projection appreciation.
Right.
Rental rate increase 6%, expense
Hmm.
increase 3%, selling cost 6.5.
Okay.
One thing, one purchase of this property at the end of the 10th year, giving the rental rate increases, right? Your
Nice.
annual net cash flow is 16 grand, almost 17 grand. So
Wow.
equal like 1,300 monthly
Hmm.
net cash flow at the end of 10th year. This is
Right.
retirement. Just
Right.
think of that. If one property equals a little bit more than $1,000 monthly net cash flow, how much income you need for retirement 10 years from now? 5,000? Then
Right.
you need to buy five of these in the next few.
Exactly. Exactly. Yeah.
if your monthly retirement income goal at 10 years from now is 10 grand, just do
Right.
the math.
Right.
Buy 10 of this
Hmm.
new construction, single family home or whatever
Right.
in a growth market with good rental rate projection, good growth in the whole 9 yards, right?
Absolutely. Yeah. Wow.
Another numerical metrics, which I use Property Tracker, you use Property Tracker also, Julie,
Yes.
because I introduced you to the Property Tracker software. So
Hmm.
anyway, I use the same, another numerical metric. One more metric people needs to learn, not only the cap rate, which is very, very high, it
Right.
9%, cash on cash return double digit, which is,
Amazing.
but you need to look at the total return on investment at the end of the first year. In this case,
Hmm.
36%. How would I calculate
Right.
this? You put down the net annual cash flow. The net annual cash flow divided by your down payment is
Right.
the net annual cash flow, which is
Mhm.
uh,
Where did we see that?
I don't,
80, 8,025?
yeah. What is it? I don't
Yeah,
even
down at the
right
bottom,
here.
bottom on the left side. Yeah.
Your net
8,025.
cash flow 8,000 something
Hmm.
divided by your down payment 57
Right.
equal
Right.
your cash on cash return of a 14%, which is amazing, right? And
Absolutely.
yeah,
Absolutely.
and the 1% rule, rent to value ratio is almost 1%, which is absolutely amazing these days, right?
Hmm. Hmm.
So how do I derive at 36%? 36%, you put down you add the annual net cash flow, then you add the 5% appreciation at the end of the first year,
Hmm.
which is right here, 10 grand. And then
Right.
some tax benefit. I know there are different ways to calculate tax benefit with the depreciation, paper loss, and all that.
Sure.
All that equals around at least 36%, right?
Hmm.
So, Julie, do you like these
Excellent.
numbers? So, out of all these numerical formats I just described, which one is the most critical for, especially a new investor to understand? To me, so which metric you
I
think?
would say the return on investment. I think,
Yes.
yeah,
Why?
the
Why is
return on
that?
investment. Yeah, I mean, because I think it encompasses the whole picture. I think if you just look at the cash flow or you just look at the cap rate or whatever, it's only giving you a partial picture of what what the property can do. But if you look at the ROI, you're looking at the total picture in totality. Yeah. So I think that would be the most important one for me.
So, Julie, I know I'm asking a very simplistic question. If someone do not buy this property, if someone have the money to do it, but they continue to sit on the sidelines,
Ooh.
what are they missing out based on the numbers?
Yeah, all that. I mean, just and then I mean, the longer you wait, I think that was the whole purpose of this particular video. The cost of waiting is astronomical, because you're going to wait. The property values are going to go up, interest rates will go up, everything will go up, the longer you wait, and then your return on investment, cash flow, everything gets cut out.
Oh, Julie, let's do a point counterpoint, if you will. Let's say
Hmm.
your, after you purchase a property, the value of the property have not gone up in the next 1 to 2 years.
Hmm. Okay.
What if that's the case? What's going to happen to the total ROI given the projection of 36%? What, how is the total ROI or impacted even short term, given the worst case
Mm-hmm.
scenario, your property does not appreciate, even lose a couple of percent in value in the next 1 to 2 years, short term.
Hmm. But again, I look at it still from a broad perspective. You still have the income coming in. You see what I'm saying? Because again, it just depends on what your goal is. If it's long-term investing, like what we chose to do, it doesn't really matter if it goes down 1 or 2%.
In fact, let me give you an answer. Let me give you a numerical answer.
Hmm.
Even if we do not factor in the loss of paper appreciation, that is,
Right, correct,
because as a long-term investor, you're not selling, right? You're
correct.
selling
Mhm.
at a distress, you're investing for the long term. You
Right,
take away the appreciation component from the total ROI calculation,
correct.
you're still going to get a total ROI of less than 36%, maybe 20%.
20%. Right.
Why? Why? I'll show you why. Because, see, people don't understand this. People, not only newbies, But
Hmm.
even experienced investors does not understand. I'll show you this numerical calculation.
Hmm.
You take out the appreciation numerical return, you still have
Mm.
cash flow. You still have annual net cash flow
Right.
equal,
Exactly.
equal to 7% return from your down payment. You still
Right.
have the amortization loan pay down by your tenant.
Exactly. By the tenant.
And that equal to 4% return from your down payment. Then, of
Right.
course, tax benefit. I know
Right.
everybody's situation is different with taxes, but you can get
Right.
depreciation. You can get paper loss. The paper loss can reduce your income, can reduce
Mhm.
your taxes.
Right.
Every investor is a little different. Some investors get amazing tax reductions and savings. Some investors does not get as much. But let's do the high level approximate. The tax benefit will equate to another 2 or 3% return from the down payment,
Right.
and then
Right. 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 Right.
that pay down. There's a numerical return,
Hmm.
and the appreciation potential at 5%. You take away
Right.
the appreciation potential, you still have a double digit total operating
Exactly.
at the end of the first year.
Exactly. Yeah. Mm. Oh, waiting for the rates that is the real cost.
And another scenario that most people just don't get it.
Right.
Newbies and many of the so-called experienced investors, they fall under this trap all over again. Look,
Hmm. Hmm.
I've been doing investing way more than 20
Right.
years, longer than most people. Here it is, waiting for rates to drop. Here are the real costs. Why waiting often can cost you more. Okay.
Hmm.
The simple truth is when the mortgage rates fall, home prices will rise. Okay.
Right.
This is not theory. It is already happening not only in North Texas that we are promoting, but in other markets as well, right?
Absolutely. Absolutely.
Florida and South Texas, Central Texas, Alabama. I mean, same
Hmm.
scenario. So what we saw during the pandemic housing boom,
Mm.
2020 and 2022, you experienced this. Your portfolio
Yes. Yes.
in the Midwest, upstate New York have grown very, very
Hmm.
similarly what I'm talking about. Mortgage rate dropped back then, back in 2020, 2021, during the pandemic, you were at the 2 to 3% 30-year fixed rate mortgage,
Right.
a historical rate that we're everybody achieving. So
Hmm.
every market have double digit, triple digit, quadruple digit in appreciation in those
Hmm.
3-year timeline, right?
Yep. Yep.
And in Dallas Fort Worth, it happened like 20 to 35% appreciation just on
Right.
a 3-year timeline in just 2 years. But many other markets in the country have also achieved amazing appreciation during
Hmm.
the pandemic housing boom. So why prices jumped during the pandemic housing boom? Because of the cheap,
Right.
massive population growth and
Yep.
limited housing supply in
Hmm.
markets, including Florida, Texas, and a few other places. So
Hmm.
your option one is, Julie, buy now. Okay, I'm gonna use a $400,000 purchase price. I mean,
Hmm.
for primary homeowner, yeah, this is a single family home, right? But
Makes sense.
if
Yeah.
you're an
Hmm.
investor, to me, if I in 400 grand is probably a duplex or a triplex, right?
Correct. Absolutely. Yeah.
The point is not whether you buy a single family home, duplex or triplex, or you are a primary home buyer as a owner.
Hmm.
That's not the point. The point
Right.
is option one is what I'm trying to prove, Julie. You know what I'm getting at. The
Hmm.
option one is buy now. Buy now
Right.
at this price point, 400 grand, which is the median price of homes in the
Hmm.
US these days, and as we conclude 2025, at today's 7% interest rate, 7%
Hmm.
interest rate maybe slightly higher because the standard mortgage rate is like 6.3 right now. But for
Hmm.
investor, you're paying more. If
Right.
because investor mortgages are higher, unless
Hmm.
unless you have you have the buyer incentives from that we have, but
Right.
assume that you don't have any kind of buyer's incentives to pay down your rate. You're
Right.
paying 7% rate. Okay,
Right.
the option one buy now 400 grand at a higher rate, but hopefully lower
At a
cost.
lower price. Right.
Option two, you wait for the lower rates like most people, right? Because
Right.
you know how
There you go. Hmm.
Julie, you and I know the human natures are very fragile. Okay, They
Hmm.
they follow the herd.
Right.
They're so fearful. They follow everybody else. They don't go ahead.
Hmm.
They're not contrarian thinking. That's why most will be
Right.
never achieve wealth in a way they should. Anyway,
Correct.
option two is wait for low rates. Stay on,
Hmm.
okay? And then in the future, that 400 grand you bought today, it could be 440K. Housing prices in good markets. I know
Right.
every market is different nationwide, but the
Hmm.
market that we are promoting are doing well will continue to improve.
Hmm.
If you, if you
Right.
if you wait for the lower rates, that property that you bought will increase to 440 in the next 1 2 years, whatever.
Hmm. Yep.
And then when the rate finally fall to 6% or even slightly lower, maybe
Yes.
5.99, maybe 5.75%, and you pull the trigger when the mortgage
Right.
rate were a little bit less than 6%,
Right.
yes, you get a lower rate by waiting.
Right.
You buying a higher price property. People
Yeah.
don't understand this.
They don't understand it. They're looking at one component and they're trying to time the market, and it never works because everybody, that's not, everybody's trying to do the same thing. Like you said, following the herd. Everybody's waiting for it to come down that 10 basis points or whatever the rates come down, so that they can jump in. But then guess what? Now you're competing against all these people. It's causing the price to go up. You're really not, you're not winning.
Yeah,
You're not winning. You would have won at the lower when nobody was buying, even though the interest rate had been slightly higher. Because if you do the math, depending on the price of the property, it doesn't make that much difference. It just doesn't.
speaking of the math, see, look at the slideshow, right? Just
Oh, I didn't even see
speaking of the math,
that.
okay. I mean,
I'm a numbers person, so I go straight for the
yeah,
math.
you know, I segue this PowerPoint in just
I
exactly
didn't even see that.
time for conversation. Okay,
Right, right, right. Yes.
and we did not even rehearse this presentation
No,
at
I just see my mind immediately goes to the numbers. It's like you're not saving, and now you're competing against a whole bunch of other people trying to get in the market. And
okay. Yeah,
it's working in reverse.
hold that thought. Okay, here's the math no one talks about, right? The
Right.
monthly savings per month, monthly savings is 20 freaking dollars
Yeah, not
by
life changing.
waiting to buy a higher price property, based on
Right.
assumptions.
Right.
It'll take you 166 years to break even.
Lord have
So,
mercy. Wow.
as an investor, you want cash flow. By
Right.
waiting for a year to 2 years to buy the same property, which have presumably go up in value,
Right.
even with a 100 basis point from 7 to
Right.
6%,
This is.
your monthly cash flow is only about $20 more
Right.
paying a higher price property. So it's not only is a
Right.
wash, you lost money by waiting.
Hmm. You lost money by waiting. Absolutely.
As an investor, $20 monthly difference in cash flow by waiting to get a low rate is
Does-
have any effect on your overall return?
No. Mm-mm.
No.
Nothing.
Difference,
Yeah.
yeah, difference of $20 cash flow because
Yeah. It's like that's nothing. I mean, you're gonna, you'll give that away to tip over dinner or whatever. It's not life-changing money. And I think most people think it is, but it's not.
yeah, because yeah, as long as your cash flow, as long as your rent cover, all your debts, obligations, and expenses, I get that. But the
Right.
difference between $20 monthly cash flow, more or less, is a drop in a bucket. It's
It
irrelevant.
really is. It really is. Yeah. And I think that people don't really think that through when they're waiting, trying to time the market, waiting for the interest rates to come down. And then you're missing just out on so much opportunity. Because what if the interest rates don't come down for 3 years?
Mhm.
You know, or what if they don't come down at all? What if they go up?
Okay.
Yeah.
When you get an amazing 30-year fixed rate mortgage, your mortgage stays the same while your rents go up and the
Right.
tenants will pay down your mortgage, this and that.
Right.
So your mortgage debt, your good mortgage debt is a inflation-induced debt destruction. And
Right. Absolutely.
uh, here's
100%.
the answer.
Hmm.
The most important point people need to come away with this. You can refinance your current rate, but you
Hmm.
cannot refinance the price you already paid.
That's right. That's right. Absolutely. I love that. I love that. Hmm.
I say it
That's
again,
right. That's
cannot
right.
refinance the lower price you already paid today
Right.
by to waiting for the rate to come down or the potential
Exactly.
price,
Exactly.
housing price higher than in the future
Hmm.
because
And that's a very good point. I think people just miss that. I mean, you can buy it, you can refinance the rate at any time. If you know you're waiting for that ideal rate to come down to whatever that sweet spot is for you as an investor, if you own the property already, you can always refinance it,
you
but you
date
got to own the property.
you, you date the mortgage interest rate
There you go.
to marry
Marry the
the
property.
rental
Absolutely.
property.
Yeah, absolutely. Absolutely. 100%. That's one. And people don't think about that either. They're just
Yeah,
thinking, I got to get this deal or I got to wait till it comes down. And I don't know.
exactly. So we're talking to the potential real estate investors out there. I repeat this again,
Hmm.
right? You date the mortgage interest rate
Right.
to marry the rental property permanent.
Absolutely. 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 Mhm.
How many times do I have to repeat this? No, don't get it. Okay. What the data shows, when rates
Right.
fall, buyers rush back, inventory tightens,
Right.
prices move
They
fast.
do. They do.
Time in the market beats timing the market,
Absolutely. Absolutely.
which
100%.
which you talked about. The bottom line is, Julie, buy smart, build wealth,
Yes.
follow the data,
Right.
not the negative headlines, not the
Right.
fake news out there. Fake
Hmm.
news is everywhere. Fake news is
Hmm.
on TikTok,
Everywhere.
on social media, on YouTube videos, on mainstream media. They're all very fake news because
Right.
everything is doom and gloom out there. You know, the crash bros, the doomers out there, they report all kinds of fake news
Hmm.
just to get clicks. Anyway,
Hmm.
Julie, as we conclude this, contrarian opportunity, investing during the fear cycle, and we are definitely in the fear cycle.
Right.
Here's my recap. Most investors act emotionally and not strategically.
Right.
Fear cycles emerge during high interest rate, which is right now,
Hmm.
headline, which is right now,
Right.
reduced transaction volume, which is right now. By the way, when I
Exactly.
say reduced transactions, in the last 2 years, Julie, that has been there's a there's a housing transactions uh, um, crash,
Oh, okay.
not a housing price crash,
Correct.
housing transactions crash. There are fewer homes that are being sold and bought in past few years than ever
Okay.
before.
Okay. Okay.
So people, especially newbie investors, they're confused about that. But
Right. Right. I can
anyway,
understand that.
okay, this is historically when the best deals are made. Right now is a buyer's market. The first time I see a buyer's market in the past 13 years,
Hmm.
ever since right after the housing crash
Correct.
back in 2008. Uh,
Hmm.
when, anyway, so right now it's a buyer's market, but the window is closing very, very quickly because the rate is already in the low 6%.
Hmm. Hmm.
Listen, if the mortgage rate goes down below 6% in next year, maybe, then
Right.
the floodgate will open and there will be potentially like 5 million buyers going to get
Wow.
off the sidelines.
Right. 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 Wow.
That will break loose. Competition will, there will be bidding wars. There will be a lack of supply, tremendous amount
Hmm.
of demand. Then home prices will go up.
Right.
All the deals are gone.
Yep. Exactly.
So prices stabilize before the rates fall. Okay, when
Hmm.
the rates drop, demand surges, and prices reprice upward. Smart capital moves early before confidence returns. Now,
Hmm.
I have this very nice sort of
Hmm.
chart.
Nice.
Okay, why waiting right now is riskier than acting, take action right now especially for real estate investors, Julie. Here it is.
Right.
Waiting feels safe, but it
Right.
carries a hidden cost,
Absolutely.
the opportunity cost. We discussed this below, so we're just
Hmm.
recapping. So
Right.
care to repeat more than one time so people can ingrain in their mind what we're
Hmm.
trying to articulate, right?
Correct.
So by waiting, you lose cash flow every month. By waiting, you miss principal pay down by your tenants. By waiting, you miss amazing tax advantages associated with real estate by rental property. Okay.
Hmm.
Now, what about the market risk of waiting?
Hmm.
Inventory tightens or demand returns. Prices adjust upward before rates fall.
Right. Right.
Buyers compete against once confidence improves. History shows, by the way, those who fail to study history will doomed to repeat the past. Yeah.
True that. Yes.
Must be a student of economics, a little bit, I'm not asking you to be
Right.
an expert, but
Right.
learn about history of interest rate, learn about the history of housing market. Okay?
Hmm.
Over the past 100 years, Julie, there only been one housing crash, 2008. Pretty much, that's it,
Right.
in the past 100 years.
Right. 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 Right.
But
Hmm.
people still trying to relate today's housing market condition with the housing crash of 2008.
Hmm.
You know what I call? I hate to say this sounds so negative. People with PTSD from the
Hmm.
GFC, from the global financial crisis. What I
Interesting.
what I mean by realistic PTSD? What is your interpretation? What I'm trying to say? You
Oh, okay. It's a current reaction to a past trauma or whatever, or past crisis. Yeah, yeah, yeah. So people are panicked based on something that may have happened like 50 years ago or whatever.
yeah,
Hmm.
housing crash 2008. People still have the PTSD,
Right.
post traumatic real estate crash
Syndrome.
syndrome. My
Exactly.
definition of real estate PTSD, which is going on throughout the housing market, throughout
Right.
people, the fragile human mind right now.
Yeah, that's it. That's it. I wish we would have met you earlier, but I'm so glad we didn't wait. I'm glad we took action once we met you.
Absolutely. You're one of the
Hmm.
few, you're one of the few, the proud, the great real estate wealth builders. In my army days, the proud, the U.S.
Proud the Marine. Right.
Marines. I was not in the Marines. I was in the army.
Your
So,
army, yeah.
but still, I still use the same philosophy.
Absolutely.
Risk investors, the few of you that take action on a consistent basis, you
Hmm.
are the few, the proud, the real estate Marines.
Right, exactly. That's right. That's right.
Okay, okay, we're having fun. Let's conclude this. I keep saying this. So, history shows the best entry points occur during economic uncertainty, which is kind of right
Right.
now.
Right.
Returns are earned by acting early,
Right.
not
Right.
perfectly. There's no such
Exactly.
thing as a perfect housing market. Okay,
Hmm.
you get in
Hmm.
early before the floodgate breaks.
Right.
Risk, people use risk in a very negative term. I get it. Human nature,
Right.
human
Right.
emotions,
Hmm.
very fragile. Risk is not buying wrong. Risk is not buying at all.
Correct. I love that. That's true. That is very, very true.
Yeah. Okay, here's a big picture. As we conclude, I keep saying recap. Market
Mhm.
cycle, Julie, market cycle timeline. Fear equals action equals repricing. What I mean by that? Okay, right now there's a fear phase, okay, which is unfounded, of course.
Mhm.
Fear during the current housing conditions, right now we're seeing high rates, not that high. I mean, right now it's in the low 6%, and yet still a lot of people are sitting on the sidelines.
Mhm.
Negative headlines, like I said earlier, housing crash bros and the doomers out there are destroying people's wealth and causing them to sit on the sidelines, continue. We talk about low transaction volume on historical
Mhm.
basis. Very few homes are being transacted in the past few
Mhm.
years during during this perceived high interest rate environment. Therefore,
Right.
most buyers, not only primary home buyers, owner-occupied types, but investors as well. Most buyers pause where smart capital people with that with the, have the dry powder to act, they act and they take
Hmm.
action. The action phase. Right now, there's
Hmm.
less competition. You have a lot of
Correct.
good deals, better pricing, great, historic sellers, rate buy down, builders incentives, which is absolutely amazing. That we have within our market, right? As you know,
Right. Right.
and you buy with cash flow starts immediately. Okay,
Hmm. Hmm.
good cash flow, I mean, in good rental market that we have. When confidence returns down the road, when the rates come down during the repricing, the next phase is 2026 and beyond, is the repricing phase. The rates
Hmm.
will ease, slowly go down, maybe, maybe not. No one can predict. No one have a crystal ball, right? To predict
Right.
where the mortgage rates are going. But I
Exactly.
expect to see, maybe low 6%, maybe a high
Hmm.
5% in the next few years.
Hmm. Hmm.
Then slowly, when demand picks up, then stacks rapidly, prices move up faster than investors expect, right?
Hmm. Correct. Correct. Hmm.
Biggest returns are captured between fear and repricing. Fear is right here,
Mm.
today's cycle, right now,
Right.
as we toward the end of the 2025. Repricing will be in the next few years. Action phase is between now and the next few months. Take consistent
Right.
action based on your goals, based on your capital resources you have available. You know what I mean? So
Right.
I keep telling you, okay, I will replay this video in a few years from now. Let's see
Hmm.
whether my philosophy will come into.
Right.
I think it will, and
Correct.
I'm trying to impart upon people's brain, especially newbie investors out there. The biggest opportunities always come from being early.
Hmm.
Once these changes start taking effect, the window is a small window, is a buyer's market right now. The window to position yourself ahead of them closes forever.
Right.
And the great investor of all time, Warren
Hmm.
Buffett,
Yes.
he said, be fearful when others are greedy and be greedy when others are fearful.
I agree with that 100%. Yes. You
Yep,
just
of
have to step
course.
out there.
And let me fast forward. You have three options. Okay, you can pause the screenshot. People watching my video, you can replay this again. I can do a consultation. Live your life on
Hmm.
your own terms.
I love that. I
And
love
here's
that.
my contact information. So, Julie, as we finish this presentation, what is your recap? What's your takeaway from this powerful message I'm trying to instill?
Right. Well, I think again, going back to the title, just the cost of waiting is astronomical. It can cost you, time, value, money, just everything, lifestyle, because the goal of any investor, I would imagine, would be to improve their lifestyle, to give them more financial freedom. And the longer you wait to do that, you're losing opportunity every day, trying to time the market away for the interest rates to come down.
Agree. So, nothing more I need
Hmm.
to say. Very, very good recap. Thank you so much, Julie. Thank
Thank
you.
you.
Thanks everyone for watching. This is Si Wing Yi from the Year Blues Network and my Julie, one of my
Thank you.
professors from our community. Thank you so much for your perspective. Have a nice day.
Thank you. Have a good day.
Next.
Bye bye.